Doug, are today's moves similar to those of Monday, or are they motivated by something different?
It's got a real similar character. I guess what's bothered us from the perspective of how deep this thing might carry has just been sort of the lack of fear. I mean, outside of the explosion in the VIX, I mean, that was fearful, but there wasn't broad panic Monday or on Tuesday morning when you undercut Monday's lows by another 500-600 points. And I still don't feel that now. So that's troublesome. And it's a reason that we expect the correction to carry somewhat further, maybe another 2 to 5%. That being said, we don't think the bull market, at least the bull market in the blue chips, which usually do best at the very end of a cyclical bull market, we think those will still see higher highs over the next, call it 3 to 6 months over the spring and summer. But, we're obviously watching the action closely, and, there are certainly there are breakdowns and developments fundamentally and technically that could change our mind on that one.
If the moves are similar to what happened earlier this week, then would we be right in expecting that this equity sell-off will lead to investors going back to risk-free assets, then yields coming down and equity stabilizing, and thus a sort of self-correcting mechanism?
Yeah. I mean, that could be the case, but I don't know. I mean, there's just been such an onrush into stocks over the last 6 months, and it got really intense by a lot of measures in the last couple of months. And I think it would take a serious break. I mean, certainly something more than 10 to 12% to diminish that appetite. I mean, investors have been trained to buy the dips now for many, many years. So I think it's going to take a while and a lot more pain to disabuse them of that notion. And again, I don't see that bigger decline. Our work would not suggest it anyway until at a minimum starting later this year.